All right. Hi, Mark. Thanks a lot for being here today. I appreciate your time coming on to talk to me. And
Absolutely.
I just wanted to kind of get your take on what has actually been going on in the mortgage industry.
Right.
I hear a lot of different things, of course, from a real estate perspective, and
Sure.
wanted to come to you, get the real scoop, um, and find out what's going on, how this pandemic has affected things, and particularly pertaining to residential loans. But
Sure.
you can talk a little to that.
Yeah, well, it's I think it's something in the United States and everybody countries other countries as well, and nobody was kind of aware that there was going to be to this capacity. Obviously it's affected several different industries, the mortgage industry, real estate, building, etc. We are one of the few industries that's been able to kind of weather out the storm, truth be told. So yes, there's been some changes that have affected the industry, but truth be told, we're actually very fortunate compared to some of the other industries like the hotels, travel, airline, where they're basically been crippled. How it kind of all started with us is in early March we had a low run on interest rates, and we saw the refinance business was very, very heavy. When the forbearance and stimulus package was rolled out, that's where it kind of started to affect us really dramatically and quickly. And we didn't know how some of the investors, Fannie, Freddie, government loans were going to adapt along with the market. So at first we had somewhat of a liquidity issue, meaning we had so much supply with little demand with the loans, and the pipelines were all full. So we were still closing loans, but the investors were not buying them at the strike price per se that we wanted, because of the demand. When that stimulus package came out, the word forbearance is very popular, and that got laid out to allow individuals with no criteria requirements to go ahead and do forbearance on loans. That is still kind of up in the air, but what we've seen is there is some recourse when that happens. We've seen a couple now that we're 30, 45 days into this where people did not make their mortgage payments, and we get it. Sometimes you have to do what you have to do to put food on the table. But we have seen 30-day lates on mortgages right away. So I don't think when they rolled this out to the public, which happens often with laws that are passed, they don't always kind of ask the people on the front lines of the repercussions. So as it stands right now, any person can get forbearance on their loan. There's no requirements. So you're going to have people that are just probably going to take advantage of it when they might not need to. However, there are going to be repercussions or consequences. One of them is we're starting to see 30-day lates. So that could affect you. I know that you and I have spoken about it with some of your clients coming up that, if we have a client that's going into forbearance and they have a 30-day late, that could affect them down the road.
Right. And so how are you seeing that? I mean, you, I guess, haven't had to adjust too much, like you said, as far as just your inner workings at George Mason and you and Jim.
Right. Yeah. I mean, we're still busy, which is great. So, but we have had to adjust on the fly. So what we're seeing is with some of the changes and the concern with forbearance, we're having a lot of changes to programs because the servicers who are now not getting paid for several months, right, still have to go ahead and pay the investors on the loans. So they still have to pay the taxes, insurance, et cetera. So they're scared because they might go up to 6 months without having any stream of income, however, still have an outlay to the investors. Therefore, it's been a trickle-down effect on a lot of the programs, credit scores, DTI, because certain loans and certain criteria on a loan they feel has a higher chance to go into forbearance, i.e. not getting paid on those loans. So we've seen some FHA and VA loans where we could typically close at a 580 credit score, slide up to a 660, 680. So that's a big pool of money that is now being affected. We're see the loan to values on some stuff where we had 100% financing, 80-20 loans. Those have now adjusted, and we've scaled those back along with the investors. So it's not only George Mason, it's industry wide.
It's all industry wide.
You know, some of the high jumbo stuff. We used to be able to do 10% down with no PMI. Now those are all scaled back to 80 at a bare minimum. And there's credit scores that are also adjusting on it. The latest is we're starting to see private mortgage insurance, PMI, is starting to increase their fees because there's a concern that those loans might go into forbearance once again, or possibly even, you know, foreclosure. So what George Mason and United Bank has done with their employees has been really phenomenal. I know myself as a manager and several other groups, we have sometimes conference calls 2 or 3 times a week saying, hey, this is some changes that we're seeing with investors. We try to inform everybody and give them a little bit of a head start, but you know, sometimes that doesn't happen. Sometimes the program changes immediately. So what we're trying to do is put out stuff and really contact our clients, our referral partners, so that they're aware of, you know, the changes that are coming down the road. You know, unfortunately, it's not always fun to be the bearer of bad news, right? It's more enjoyable to go ahead and give the good news, but at this point, we still need to go ahead and keep everybody informed, even if it's not what they want to hear.
Right. So you are basically still able to do all types of loans, like you mentioned, the FHA, but it's just at a stricter level as far as qualifications.
That's right, Rich.
Correct?
Yep, correct.
Okay. And how are those rates? Like you talked about earlier in March, where everybody was going crazy refinancing and the rates were so low. How are they still generally low, or are they?
Yeah, no, as a whole, I would say 90% of the products are still in the low to mid 3 percentile. I've locked in a couple clients, you know, one of our clients, you know, is a pretty decent sized loan. I think they were at 3.25 with 0 points. So they are good. You know, there are certain loan products like the BHDA, which is a popular first time home buyer product, that still allows for the lower credit scores of like a 620, 640. Those prices have increased though, because once again, those have maybe a higher potential for foreclosure forbearance as people are getting laid off.
Okay. And so from going back kind of, you know, obviously I'm looking at this a lot from a real estate standpoint.
Right.
And as far as residential loans, are you seeing changes from contract to close as far as, I mean, I know we've worked together and done you've gotten some things through for me so quickly. But is that still, how are the days from contract to close? Are we looking at different timeline now, or is it
no, not really. So our contingency timeframes are still within line of, you know, I know you and I often do 14 days for both of them. So we're still meeting those requirements. Some of the appraisal requirements have actually changed and allowed us to go ahead and keep those timeframes within line.
Okay, so the appraisal requirements have lightened up a little bit so that they're able to.
Yeah, they really have, and even with, you know, a more strict appraisal like a VA. So the appraisers have the ability to go ahead with most products, go ahead and do some exterior stuff. If you have a real high loan to value, say like a 95 or above, then there might be those files or loans that they have to go ahead and do the full inspection. But Fannie Mae, Freddie Mac, Jimmy has tried to adjust with these trying times and realize that, you know, the appraisers probably don't want to go in there any more than they have to, and the clients probably don't want to have them in the house any more than they have to, just from a risk standpoint.
Right. That's certainly understandable. Well, it's great that everybody has seemed to really grab hold of this quickly and make things work so that there wasn't really a few bumps here and there, it seemed like, but everything's moving along pretty well.
Yeah, knock on wood, especially with the local counties we've been able to close, record. We can do, as you well know, 95% of our business now is online, uploading documents with the client. So we have some notaries that'll go out to the houses. If people feel uncomfortable, it's kind of common where they'll go ahead and sit on one side of the table outside and the clients sit on the other. So we haven't had too much problems there. All in all, it's obviously changing. However, we did have some good news this week. So FHFA, which is Federal Housing Finance Agency, came out and basically said that they were going to try to help these servicers if loans go more than 4 months in forbearance. So that is one good piece of news, which will probably increase the appetite for us to do when we're selling our loans, make sure that these are sold and continue to be able to offer some products versus continue trying to discontinue rather any decrease in options per se.
Okay, great. Well, is there any particular advice you would give? I have, buyers are sitting there going, well,
Sure.
we were going to go forward, but now we're going to wait until this COVID-19 is
Sure.
over. What, and I know it's in, per individual case and all that, but just what is your advice in general of somebody that was thinking about getting in? Is there a reason they should or shouldn't really?
Yeah, no, I think that's a great question, Rachel. I think one of the things, if they've been qualified or if they haven't, make sure they do so. But I would truly go ahead and request that they go back to their lender to make sure that they can get that product or something similar, that's still there, okay, first and foremost. And then, there is a flip side to some of this, right? Because we're in the Northern Virginia market where it's so aggressive. There's so much competition. I've had some clients as of recent, we're still ratifying contracts, but they've been able to get some of those homes, whether it's in a specific zip code, school district, cul-de-sac, et cetera. They've been able to get those contracts ratified where, maybe there was only 2 offers competing versus 10 to 12.
Right.
So there are some advantages. What we're seeing as a whole is that I think once we get through this, we don't, that's the $1 million question or the magic answer. I think the real estate is going to be right back on track. We have Dave Stevens, who's one of our board member, kind of discuss what the future for third quarter looks like. I think we're averaging like 2 to 3% now, and then for third quarter, they're anticipating close up to 13% increase.
Wow.
So that is positive news.
Yeah.
Yeah. So, I think we'll be fine. I think it's just some uncharted territories per se, that we're adapting as we go.
Yeah. And like I said, it seems like everybody's been adapting pretty quickly. It's quite
Absolutely.
amazing.
Right.
Well, thank you so much, Mark, for your time. I really appreciate it, and some great information there. And
Sure.
I know everything is changing day by day, so maybe we can do this again if we have some updates later on. But
yeah, I think that'd be great. And feel free to have give me a call or have any of your clients call if they want to bounce some ideas on. We're still lending money, so there has been some changes, but I think once we get through this, the second tail end of 2020 will be really good for us.
That sounds great. And what's the good contact for you? If somebody wants to
Probably the best is my cell phone, which is area code 703-395-4339. And you can go ahead and email me, which is mkilfeather, that's MKILFEATHER @gmmllc.com.
All right. Thank you so much, Mark, again. I appreciate it, and hope you and your family all stay safe and well and sane during these times.
That's
and,
right, yeah.
That's the trick we're all trying to hurdle over right now.
This is true.
I really appreciate it. You take care and talk to you soon.
Hey, thanks, Rachel. Have a great afternoon. I'll talk to you soon.
Thanks.